You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi there, it's Victor here from foreshowmarkets.com. In today's video, I'm going to be showing you how money is made in the Forex market. So how exactly do we make profit in the Forex market? And that's what I'm going to be showing you today. Okay, so come with me to the slides. All right, so how exactly is profit made? Okay, so basically we are in the Forex market as traders or investors, okay, primarily for one reason, and that reason is to make money. Okay, a lot of traders, a lot of investors unknowingly are in to this for the adrenaline rush. Okay, the rush of the adrenaline they get every time they trade, every time they see their portfolio rising and falling. Okay, but experienced traders who have been in the game long enough mature to a level where they understand that the reason why they are in this business, in trading, is to make a profit. Okay, so how exactly is a profit made? And so let's look at practical examples and real life examples. Okay, first of all, you need to understand that there are two ways in which money is made in the financial market. Okay, one, money can be made in a rising market. Two, money can be made in a falling market. But for this particular video, we're going to focus on how money is made in a rising market. And in the next video, we'll look at how money is made in a falling market. Okay, so in a rising market, making money in the Forex market is likened to, example, the case of real estate. Okay, just like real estate, for you to make a profit is as simple as buying, either you buy a land or you buy a property that has been developed, okay, and then you hold it for a period of time. And of course, the normal thing in Nigeria and Africa, developing countries, is that the value of that asset or that property rises over time. In a few months, half a year or a year, the property rises, and then depending on how long you hold, you can sell for a nice profit. Okay, so the currency market, the Forex market, the commodity market, the whole of the financial market is exactly like this. So either you're dealing in currencies, metals, commodities, and all of that. In rising market, is simply about being able to buy at a low price and sell at a higher price. What you hear most times in the market is what? Buy low, sell high. Buy low, sell high. Okay, you don't want to be like the guy who buys, example, who buys a Toyota Camry at 4 million naira and sells it 7 days later for 2 million naira. Okay, it sounds funny, but you find a lot of such transactions. You find a lot of such trades in the Forex market. Okay, so let's go ahead to see how exactly is this. Let's look at a practical example how this plays out in the market. Okay, so let's say, for example, you have 150,000 naira, and the prevailing exchange rate right now, right, this is a hypothetical situation, the prevailing exchange rate between of the dollar to the naira is 150 naira to $1. So to get $1, you need to part with 150 naira. Okay, so 150 naira to $1, that's the current exchange rate. Okay, and so you buy as a speculator, you speculate or you analyze the market and you believe that the market is going to go up, okay, for you to make a profit. So you buy $1,000, okay, you buy $1,000, okay, for you to buy $1,000, you need to pay 150,000 naira, okay, so you spend 150,000 naira to purchase $1,000, and then just like in the case of real estate, you hold it for some time. Okay, and then so let's say after 6 months, that exchange rate moves from 150 naira to $1. It moves up to 500 naira to $1. Okay, this can happen for so many reasons. Example, in the Nigerian scenario, it can happen when the price of crude oil is falling. It can happen when there's a recession. It can happen when there's scarcity of dollars. Okay, remember our video on supply and demand. Okay, and I've talked about so many factors why this exchange rate fluctuates up and down. Okay, so let's say after 6 months, this exchange rate moves from 150 to 500 naira to $1. Okay, and so as a smart investor, as a smart trader, you already see that the value of your portfolio, your equity, has appreciated. Okay, and then you now decide to sell the same $1,000 which you bought at 150,000 naira. Okay, you now decide to sell the same $1,000. You sell it at the exchange rate of 500 naira to $1. So what you will have when you sell that $1,000 is what? 500,000 naira. Okay, so you started out the investment journey with 150,000 naira. Okay, and you ended up that investment journey with 500,000 naira. You have made a cool profit. And so what is the profit there? The profit is simply 500,000 naira, take away 150,000 naira, which was the initial investment. And so you end up having a profit, okay, of 350,000 naira. Okay, what has just happened is that we experienced a rising market. The value of that exchange rate rose from 150 naira per dollar to 500 naira per dollar for us to make a cool profit. Okay, and so this is just a practical example of how you make money in the forex market when the market is rising. Okay, this is just a very simple example, but when we go into the charts, right, and we go into and start looking at asset classes like euro dollar, pound dollar, dollar yen, crude oil, gold prices, then we'll see a more deeper and in-depth analysis and practicalities of how money is made in a rising market. Of course, this video is done for beginners, so I'm taking you step by step, gradually into the advanced level. Okay, so this is how money is made in the rising market. Okay, so in summary, you buy. If you buy, you profit when the market goes up. Now, this was done on purpose. I wrote here, you profit when the market goes down. This was done on purpose for my students to point out to me that I have made a mistake. I did it on purpose. So, in summary, if you buy, you profit when the price goes up, right? And if the price goes down, okay, then the value of your asset or your commodity or whatever you bought goes negative. Okay, in the investment, in trading, we get used to fluctuations in our equity, fluctuations in the value of whatever we bought, because we know that it is part of trading. So we expect that we could buy maybe euro dollar or gold or crude oil and the value can go negative before going positive. As long as you've done your analysis well and you know exactly what you're doing, you should likely end up in profit. Okay, and so that's a brief summary of how you make money in a rising market. You buy, you allow the whatever you buy to appreciate in value, and then you sell off for a nice profit. Okay, so I hope you've learned something new in this video. If you've learned something new, give us a thumbs up. Okay, if you are yet to subscribe, make sure you subscribe by clicking the subscribe button, the red subscribe button below this video, and also click the bell beside the subscribe button and click all notifications so that you get notified whenever we upload a new video. Okay, so this is forex trading for beginners, and we're going gradually we're going into more advanced stuff. So I hope you're enjoying the journey. Okay, stick with us. In the next video, I'll be showing you how you make money in a falling market. All right, I'll see you in the next video. Cheers.